Welcome to a new episode of BFRR, our Bitcoin, Fiat, and rock and roll podcast that explores the intersection of traditional finance, digital assets, and digital money, and helps you understand how digital assets and money will evolve in the future. I'm co-host Jonas, and today I'm again joined by our guest host, Jonathan Knoll. Hi, Jonathan. Great to have you with us today again.
Hi, Jonas. Great to be here again. Very excited about another episode of Digital Money Interview.
Absolutely. I'm sure it will be a very interesting one and entertaining one, I hope. So today we have the opportunity to speak with one of the leading thinkers in the digital money or digital asset space, somebody who was already in this podcast a few years ago, actually 4 years ago. So this clearly shows how time flies and also how the space develops. And this leading thinker is Dante Disparte.
Well, I must say, sorry, Jonathan and Jonas, it's great to be back on. Nothing has transpired in the last 4 years. It's been boring.
Pretty dull, hasn't it?
Yeah.
No, it is so great to have you on the series. And, you know, when Jonas and I were first talking about the series, we very deliberately thought about what do we want to get out of it. We want people that will give a straight talk, no marketing BS, right? People that are innovating at scale and also more of a non-European perspective, right? I think Bitcoin, Fiat, and rock and roll has been super successful for many years, but it's really good to get sort of an outside-in perspective. And Dante, you tick all those boxes, of course. And fortunately, we had the opportunity to meet way back when, the early days of the Libra Association. And like I say, you're one of the smartest, most articulate people I know. And in addition, I don't think anybody on the planet, you'll have to tell me if you think there's somebody else that has had more conversations, that I don't know who has spoken more to global policymakers and politicians over the past, 7, 8 years or so?
Yeah. Well, it's, some might look at it like an occupational hazard. Others might look at it as part of what has helped advance the policy and regulatory clarity that has now come. You know, there's a friend of mine says, be careful in asking for justice. You might actually just get it. And so here we are, literally all these years later, the category that Jonathan, you and I were once working on with the ill-fated, very, very controversial Libra project is now legally permissive inside the global financial system. It's no longer fringe finance. It's at the core of finance. So in some ways, you could argue our little reunion tour can equally be a reflection on looking backwards, but hopefully also casting our eyes into the future and what happens next. But it's great to be back on and lots of great developments, frankly, around the world.
Well, thanks for taking the time and so glad to welcome you to the show. So thank you so much.
Yeah, and obviously, I guess, Dante, we don't really need to introduce you because everybody knows you and you already were in the show before, but just for completeness, obviously. Dante is head of strategy and global policy at Circle, and what we want to discuss today is really all things Circle. We want to talk a little bit more about Dante's journey, not too much because we also already talked about that the last time we spoke about Circle strategy, the business model, also kind of the Euro coin, so the European stablecoin, Euro stablecoin versus USDC, how they compare, what the use cases are. Also the own L1, the ARC blockchain, where I'm very curious to learn more and also get a little bit of an understanding from, as Jonathan said, all the discussions you had with policymakers and regulators, where we stand and also how you look on the stablecoin market. So yeah, kind of a very wild mix of topics, but I'm sure it will be a very interesting one. And let's go into this, Dante. So, if we maybe zoom back a few years, so maybe, even before you met Jonathan in the Libra days, like what were kind of the things when you started your crypto journey? Like what fascinated you around the topic? And you are now, in the space for so long, you're busy. I guess your days are also pretty long. Like also what, kind of is driving you and motivates you every day?
Yeah. No, that's awesome. So, look, in the early days, like many people, you didn't discover crypto discovered you. And in my case, my crypto discovery was, in my risk and insurance capacity. Two things were happening at the same time. A lot of the world's infrastructure and privacy infrastructure was being really broken pretty easily. You may remember some years ago, one of the 3 big credit bureaus in the world, Equifax, had this huge data breach and revealed publicly the personal information of, nearly 150 million people. And that breach really underscored how much of the financial system and the broader systems that we were relying on had single points of failure. So that was one big point of interest for me. And then I was doing a lot of work together with the former Secretary of Homeland Security, Tom Ridge, and many others on complex risks, cyber risk, political risk, climate risk, you name it. And along came this novel technology, blockchain, that at least on paper, and obviously in reality, we could look backwards and see so much of this was true, was inherently disaster resistant. Nothing in the world is going to be disaster proof, but inherent disaster resistance, I think, is a really great way of thinking about re-architecting the financial system. We still need it to work. It still needs to plug into banks and all the rest, but that was my original foray. And then I was invited to Richard Branson's island back in 2017. There was a small gathering of 40 people for one of the first blockchain events they held on the island, and I was lucky enough to go. But as fate would have it, I go to the island, and the island is flattened by a Hurricane Irma. And I came out of the island thinking, gosh, either correlation equals causation, or there's now a demand on this group of people to really do something with this blockchain technology at scale. And so that was my original crypto journey. Some people bought Lamborghinis. I flattened Richard Branson's island.
That's really a cool story, Dante.
Wow, that's a bold statement.
But it's also quite interesting because, that's also what I really like about blockchain technology, Bitcoin and co. Everybody approaches this from a different angle, right? And I think I've heard many of them, the technology being independent of the state, of course, a new asset class with such a scarcity and everything. But, this risk perspective I haven't heard again for a couple of years. So that's really cool that you, kind of entered this through this lens. And I guess, Dante, when you now compare a little bit the situation of today with the Libra days, or maybe even before Libra days, like you talk to so many folks, to so many regulators, like what do you have the feeling where the market currently is? So what's kind of, the stance of regulators of the markets towards digital money? Because obviously this has turned 180 degrees compared to Libra or pre-Libra maybe even.
Yeah. Well, yeah, no question. And so the funny thing is, and Jonathan knows this very well, he was with me in those trenches. I mean, first of all, I would do it all over again. And if you look at my early writing at the time, I was writing in Forbes and other publications. I was no fan of big tech, especially after the 2016 election. We had privacy issues, and the argument is, if I couldn't trust you with cat videos and election integrity, I probably couldn't trust you with money. But the other interesting irony is a lot of people were criticizing me that I had, quote, joined the dark side, but they were criticizing me on WhatsApp. And I said, interesting that a Facebook-owned encrypted messaging platform could work for you to criticize me, but it couldn't work for money and financial inclusion and all the rest. And so I had to make a personal calculus of win, lose, or draw. The Libra project would change at least the global conversation, because the scale of the project and the scale of the effort had to be taken seriously. And no question, the regulators took it very seriously. And 7 years later, you fast forward, and in so many ways, I think the rise of stablecoins vindicates the digital money side of the equation. The global regulatory convergence vindicates that the regulators were justified in one part on some of the fears that they had, but on the other hand, they have been justified in bringing the activity of stablecoins into the perimeter. And then third, the technology maturation that we have also seen over that 7-year journey, and Circle has been right at the heart of all of it, frankly, vindicates that these three things needed to happen at some point in time in order to reach both institutional adoption and end user reach and scale. And so I think we're there. And I think, it's been an extraordinary journey, but hopefully what comes next is also where we could really start showing real world impact, human impact, because so much of the financial system, what got me out of bed for Libra, is still the challenge today, right? It's very analog, it's slow moving, it's expensive, it's costly, there's billions of people on the margins still. And so I think so much of the work is unfinished, but so many of the obstacles and the historical risks are also no longer there.
Before we jump back into today's episode, a quick word about an event close to our hearts, the Point Zero Forum, an annual gathering of over 2,000 policymakers, central bankers, regulators, and industry leaders at the intersection of finance, technology, and policy. BFRR is proud media partner of the Point Zero Forum, and we'll be reporting live on site with the full co-host team. Organized by the Global Finance and Technology Network and the Swiss State Secretariat of Finance, the Point Zero Forum takes place in Zurich from 23rd to 25th June 2026. This year's lineup includes Swiss Federal Councillor Karin Keller-Sutter, Tether CEO Paolo Ardoino, former crypto head of policy at Andreessen Horowitz Brian Quintenz, and NVIDIA's EMEA financial technology lead, Dr. Jochen Papenbrock. The agenda covers everything from AI in financial services and digital assets of stablecoins, tokenization, and the new regulatory frontier where the rules of finance are being rewritten. Come meet us in Zurich. Register at point0forum.com, and as a BFRR listener, you get 30% off the full price industry pass with code BFRR2026. I repeat, BFRR2026.
Yeah, I think it's a great way to sum it up, Dante. And I don't know about you, but I have so many people that have told me over the years, first of all, one comment was it was the best possible idea, right? People loved the vision. It was a great vision. Best possible idea from the worst possible company, right? That's the one joke, right? And kind of over focus sometimes on what was then still called Facebook. But the other side of it is so many people have told me, oh, thank you guys for taking, getting the bloody nose for us and kind of pushing the envelope a bit. I used to joke that I didn't know if I was working at Napster or Spotify at the time, and turned out to be Napster and not Spotify, but there you go.
Yeah, exactly. Well, I'm going to get a t-shirt that says, I moved on from Libra, you should too. And but undoubtedly the project was a heat shield, and undoubtedly some degree of credit is owed, because I don't think we would have had nearly as much regulatory attention, for good or for ill, without a project like Libra showing up. And with the benefit of hindsight, I think we got a lot right over that period of time. I mean, for example, I know this is a somewhat European-oriented show, but people like Peter Kirstens, who I joke is sort of the godfather of MiCA or MiCA, the Markets and Crypto Assets Regulation. And he and I saw each other not long ago. He's like, well, if I'm the godfather, then you're the midwife, because the Libra project catalyzed the acceleration of those rules in Europe. And now we have legal and regulatory clarity in the third largest economy in the world. The United States caught up with the Genius Act. And, the United States, we're a bit more laissez-faire than Europe is in terms of rulemaking. But there's no question, one of the things that got Congress to move, aside from the many, many years of development of those rules, was the notion that we were going to follow the Europeans as opposed to lead, considering that the majority of stablecoins in the market are dollar referenced.
Yeah, 100%. And we're going to double click a little bit on that a little bit later as well on the regulation part. Let's spend just a minute, though, get off of Libra, and let's talk about Circle. Your strategy and your business model. Most people know Circle obviously as the company behind USDC. I have sensed, I know this is stuff that's been going on, I'm sure for many, many years, but I've sensed in the last 6 or 12 months, Circle much more positioning itself as a full stack financial infrastructure company, I guess is the way I would describe it, as opposed to just a quote unquote a pure stablecoin issuer, right? You have, as Jonas mentioned, really interesting things like your L1 with ARC, you've the acquisition of Interop Labs, your Circle payment network, et cetera, et cetera. So just on the high level, right? How do you, as you talk to folks about this, how do you want the market to think about Circle today as an issuer, as a network, as an infrastructure provider? All three, or maybe there's something I'm missing in between that?
Yeah, no, it's great. It's a great question. So, Circle, while most widely known for issuing, the world's leading regulated digital dollar USDC, we're also, frankly, the leader in all of the categories of tokenization and the related infrastructure, right? So we have USDC, a table stakes payment innovation, dollar-based innovation, and stablecoin land across more than 30 blockchains, a ubiquitous product that sort of solves so many of the both historical, regulatory, and current and ongoing trust and safety issues in this market, which is that if you have to take my or Jeremy's word for it on crypto Twitter that it's that the money is in fact there, it's not a trusted product. So the trust but verify test, USDC is the leader. The regulatory test, USDC is the leader. The liquidity, banking, and on and off ramps into the real economy test, there's no peer to USDC anywhere in the world. But obviously, there's more to Circle in the category of tokenizing money than USDC. We also run and operate USYC, which is the world's largest tokenized money market fund, a yield-bearing innovation that has outpaced the growth of all of the other tokenized money market funds out there. And then lastly, we run the largest euro-denominated stablecoin, EURC. So in what a lot of the central bankers are now calling a multi-money system, credit to the Bank of England for that term of art, Circle is a world leader in the tokenized renditions of money on the internet with $1, a euro, and the world's largest tokenized money market fund. But there's more to the company than that. Obviously, over our 13-year history, we've been at the very bleeding edge of the rise of blockchain-based financial services. And we're a multi-chain or even an omni-chain company in terms of Circle's positioning at the core of all of this infrastructure. And part of what that early journey and all of that experience has given us is the ability to also serve as an abstraction layer over the crypto and the blockchain and crypto by giving both institutions, developers, and the broader market the ability to say, we could build on Circle's technology stack for everything as simple as the last mile wallet infrastructure or everything as complex and critical as cross-chain bridging infrastructure through Circle's cross-chain transfer protocol, CCTP. Those are known developments, the Circle technology offering. And then we have a couple of new projects coming online or online now. One of them is the Circle Payments Network, which is an orchestration platform for cross-border money movement with stablecoins and other forms of tokenized money. That's a market-neutral infrastructure not meant to cater singularly to our stablecoins, but more broadly the full market. Think of it like Swift for tokenized money as a for want of a better description. And then we have a blockchain coming online called Arc, which we describe as frankly bigger than payments and bigger than stablecoins. We think of Arc as an economic operating system for the internet because there's so much activity that will rely on open blockchain standards. And we wanted to bring the best of all of these lessons to bear on Arc as a new innovation coming from Circle.
And I mean, Dante, when you mentioned all the initiatives, I mean, I think it's really cool what you described. Like, it's really about this, bringing money to the internet, to have here Circle on a lot of fronts, be it more the front end, more the back end, the infrastructure piece. And what I was really wondering, and you mentioned this just now, was Arc, right? So basically, when we think about Arc, and what we have been discussing in this podcast a lot is new institutions launching new blockchains, new banks and e-money institutes that want to launch stablecoins, right? And I'm always asking myself through the lens, is this really necessary? So, another new infrastructure will make the system more complicated. So, I ask this, question to everybody who says we build a new infrastructure, but, what's kind of let's say the value propositions of Arc also compares to, all the other L1s out there? And why did you decide to, to set up your own blockchain?
Yeah, no, it's a good question, and it's the same question we ask of the broader market. And I have an article that I wrote for the Korean Herald newspaper about stablecoins, which is the open question every institution is now asking now that we have legal and regulatory clarity, at least on both sides of the Atlantic with Genius Act and MiCA, is build, buy, or partner. And my analogy to the stablecoin category, and I will come back to the Arc question in a minute, is you and I wouldn't want to necessarily build our own AI large language model or our own AI data center because we want to tinker with AI any more than it would be a very bad strategic decision for, a household name financial institution or a global payments company to try to, re-engineer the liquidity, the ubiquity, the broad market access, and the multi-chain access of a stablecoin. And the history proves it out, right? When you consider a lot of the stablecoin flavors that we have seen over the years, from the stablecoin versus central bank digital currency to this deposit token debate, to the white labeled stablecoin debate, to the closed loop stablecoin debate, in the end, the liquidity and the network effects of digital money like USDC also very much analogizes to the success of other world-scale technologies. AI models, better to build on the existing models than to try to build a rival model. And we think the same holds true with money. And a lot of companies have figured that out. What they're serving as is connectivity layers and on and off ramps. The banks that have done the best in that 7-year journey we're talking about have been the banks that stuck to their core competency and have banked the sector rather than tried to have co-opetition with the sector. And so as a stablecoin grows, the balance sheet of the banks grow and the banks do better overall. Why build a blockchain, right, at Circle when you're a multi-chain company? It's a very fair question. And part of what we're acknowledging is what is the next layer of both performance, privacy, quantum resistance, and other issues that are on the horizon that we know not only will the developers need to continue building on and relying on, but will be one of the critical technological unlocks for institutional adoption. And so ARC is meant to fill that void. It's also meant to do the things that blockchains are best known for, right? Serve as an open layer for economic activity on the internet. Cater to developers, abstract away the costs, the frictions, and the other issues that developers face when they're building on open technologies, but to make it, in some respects, financial services shareware. And the notion of shareware, just like USDC, is the ecosystem does not carry the cost of compliance, liquidity, banking integration, and all of the operations of that infrastructure. That's borne by Circle. With ARC, we're trying to not only carry that path forward, but also bring into ARC a range of institutional ecosystem partners who would be validators on the network, but who will also ensure the network has broad access around the world. Again, for more than payments, for broader economic activity. But there's a lot of lessons learned in being a multi-chain company for all of these years that are being designed into ARC, while at the same time not losing our DNA and our spirit of being plugged into the rest of the blockchain ecosystem. The proof is in the pudding. USDC is on more than 30 blockchains and counting, and we will continue that commitment as well.
Yeah, that's perfect. And that you're touching on exactly one of the issues I was going to talk to you about, because to me, it sounds like ARC is more geared towards kind of traditional institutions that are coming in and needing exactly what you're describing. At the same time, Circle is always, to date, the strategy has been around, market neutral, open, common goods, very antithetical to walled gardens kind of approach. And I think you were just answering that, but I just wanted to just kind of double click on it. It sounds like it's not an either or proposition. It should have an augment of depending on who the player is in the market. Would that be kind of a good way to think about that? Or how would you think about it?
Totally. And as you know very well, Jonathan, the real boss fight in some ways is walled gardens in the payment system. Like that is where, how useful is a stablecoin if the stablecoin rides on closed rails or on, networks that cater to incumbents, right? So I've always warned that, sure, notionally you could issue a white labeled payment stablecoin and you could put your corporate brand on it. But if all it does is create a digital twin of the underlying closed payment system that many of the world's big payment systems already operate, then you've just created a digital twin of a walled garden. And I call those monetary airline miles because they're usable on closed networks. Obviously, the breakthrough innovation of a stablecoin in the context of global payments and banking is that for the first time in human history, we have the settlement asset and the messaging instruction in one product. It's a total breakthrough, which is why, as you know very well, in the Libra project, we had originally 28 organizations, among them the biggest payments companies in the world. And they weren't there for charity or altruism. They were there because at the dawn of Netflix, you don't want to be Blockbuster Video. And you fast forward to today, and USDC and the total circulation of stablecoins has crossed over into 300 billion in total circulation. But even a comparatively small circulation through velocity of money supports an extraordinary amount of economic activity, and settlement speed and velocity, et cetera, are part of the features. USDC, in my tenure at Circle, has gone from availability in a small handful of wallets to more than 185 countries around the world. $80 trillion in cumulative on-chain economic activity is supported by USDC. And the key is to do that in as open a manner possible so that any internet-enabled wallet and device can be a compliant payment endpoint. but also to address the institutional, regulatory, safety, soundness, and other expectations that are uncompromising. And so credit to the regulators, because both Genius and Mika are tech neutral when it comes to blockchain infrastructure. They're putting a huge amount of obligation on the issuer, but the infrastructure itself is designed to be open. And I think that's a huge win for the world if we keep that right.
Yeah, absolutely. I couldn't agree more. Let me step back a little bit on the business model aspect of this, because, looking through your latest results, the reserve income is still, the dominant earnings line at this point. And not to bring Libra back into this, I should stop doing that now. But I remember when we were, looking, that was a core component, obviously, of the business model. And its float-driven model is a great model to have until it's not, right? And we experienced exactly that timing, right? Rates were up and then they went down, and even to the point of being negative in Europe. So thinking through everything you just said about moving from sort of the reserve income model to all the other really interesting things you guys are building out about money movement, really, and all of that, and how you might monetize that. What would have to be true for the non-reserve side of the business to become genuinely material?
Yeah, I mean, for one, as a public company, the good news is any inquiry and any query about the business model, the revenue model, and beyond is answerable quarterly, and answerable candidly in our category of business, often in real time, because the circulation of USDC, EURC, USYC, and all of these core tokenized money products is a real-time reportable activity on the broad internet. And one of the reasons we think both the market trust circle and the regulators have effectively made our way of doing business the standard to be a stablecoin issuer, trust, transparency, auditability, verifiable activities, et cetera, is the legal basis for issuing stablecoins around the world, is because if it is to serve as a form of money on the internet, trust is a feature, not a bug. Transparency is a feature, not a bug, and so on. And so a lot of the business model implications of tokenizing money, I think, are very well known. And as a result of how well known it is, not a lot of the world's currencies are extraordinarily great candidates at being stablecoins, at being fully reserved payment stablecoins. And frankly, not a lot of the world's banks would be very well placed in issuing stablecoins or deposit tokens because of the very risk that the bank's balance sheet, unless it is guarded and preserved and matched one-to-one with assets and liabilities the way a stablecoin issuer has to live, would not be great balance sheets from which to issue fully reserved open digital money. That's now the legal requirement under the Genius Act, which is if a large bank wanted to issue a stablecoin under Genius, they'd have to do so from an entirely separate balance sheet with no risk or rehypothecation or leverage in the balance sheet. Now, so all of those pillars of a business model of a stablecoin issuer are well known, and we answer those questions. I would encourage you and listeners to, our recent commentary from Jeremy Allaire at the close of last year and the first quarter, I think, was really intelligent commentary broadly on Circle, its business, and the rest. What is then implied by the other side of the house, if you will, the Circle Payments Network, the technology offering, and all of the rest, is that these are activities that are meant to continue advancing economic mobility, economic access, and economic velocity, not just in stablecoins and in crypto. Frankly, one of the horizon opportunities in markets we anticipate and see is the rise of agentic economic activity and commerce. If the joke historically was, well, stablecoins are merely poker chips in a crypto casino, and people who made that comment ignored how they would be a part of an always-on global financial system, or that they would be used as a form of collateral in capital markets in their current form, people would have missed that transition. I think a similar transition is afoot right now, where we go from poker chips in a crypto casino to always-on digital money to the perfect medium of exchange for agentic commerce and economic activity. That's happening. And it starts slowly at first, but effectively stablecoins are the perfect medium of exchange there because software will speak to software and because of how ubiquitous the open infrastructure is. And so you have two categories of activity that cater to technologists and developers coinciding at exactly the same time. So there's a lot, not just in terms of implied monetization, but there's a lot in terms of connectivity and entirely new forms of activity that none of us could potentially anticipate.
You also mentioned before, Dante, that there are some use cases, obviously, where a lot of stablecoins are already used today, right? Which is often, around decentralized finance, maybe also, some kind of hedging towards other crypto activities. And you also mentioned that, of course, and I guess everybody is, looking for more and more real world, kind of real world use cases in a sense of also remittances, which are, I think, strongly accelerating. But I think globally, at least my feeling, still on a low level. Like, where would you currently say, where do we currently stand in terms of the use cases that stablecoins fulfill today and where we can go in the future, right? So you mentioned agentic obviously as one use case, right? Potential exponential one, right? But where do you generally think we stand here? How much of the use cases are already satisfied today?
Yeah. Well, I mean, look, historically, maybe 4 years ago even, I might have used the analogy that what are the use cases for a physical dollar? Which I have, editorial credit to Jeremy Allaire for that line. But you fast forward to today, and now you could look back with the benefit of, again, a 4-year history since I was last on the show, and you could just see this range of integrations with traditional financial service operators and platforms, from the Visas to the MasterCards and places in between, to a novel use case that is being encouraged by capital markets regulators like the CFTC here in the United States, encouraging fully reserved stablecoins and USDC by name as a form of collateral in capital markets. That's a total novelty. And in the category, it would be a risk management improvement to be able to have programmable, fully reserved money in capital markets. It would be a huge risk management improvement in terms of transparency, price discovery, settlement finality, liquidity, et cetera. Those are new, and those are, just two examples of just institutional adoption. I think the things that are still true, though, especially in a world with so much political risk and headline macroeconomic uncertainty, is the aspirational nature of access to the US dollar really is heightened in periods of geoeconomic and geopolitical stress, right? So if you're in an active conflict area, if you're in a war zone, or if you're in a country where your domestic currency is hyperinflationary, or worse, not worth the paper it is printed on, the growth of stablecoin supporting wallets, along with the regulatory clarity that comes with the category today, means that more people in more unstable regions now have access to a stable currency. And so the store of value use case, it's easy to ignore because it may not necessarily represent another press release, another, large Wall Street institution adopts stablecoin. But I think that is in many respects the most powerful human-first, human-centric adoption story of stablecoins is a store of value against local hyperinflationary currencies. I think is a really important one. A lot of the agentic activity that we see, and some of it we're trying to catalyze at Circle. For example, we ran the world's first AI native and fully AI judged hackathon with OpenClaw. And we set this project and process in motion at first perhaps as an internal experiment, but then when we saw the success of agents judging agents and agents being able to pursue an economic reward payable in USDC and stablecoins, we could see that this literal always-on smart economy could take off. And so my advice to regulators and policymakers and central bankers is you cannot have the economy of the future unless you have the money of the future. And you could really see lots and lots of integration of stablecoins plus this novel market that's coming online that are really powerful.
I am equal parts excited and scared by what you just I think equal parts. We will see. Ask me in 6 months. No, super interesting. So very interesting. Let's, I know we've touched on it a little bit, but I want to go back to regulations, global regulations, because I said at the onset, literally, I can't personally think of anybody that has had more conversations with literally global regulators for many, many years. So you can talk about the pros and the cons and the differences and the similarities. So I'd like to unpack it a little bit. So Mika, from the Europe perspective, we've got Genius Act and Clarity Act in the US. Talk a little bit about your perspective, and particularly Circle's perspective, on where do these regimes overlap cleanly? Where do they conflict? What kind of operational complexity does that bring a company like Circle having to do this in a global, scalable way?
Yeah. Well, first, back to my earlier comment, again, with attribution, that be careful in asking for justice, you might just get it. And so we got it, right? Crypto broadly, in my long journey in this industry, has always clamored for acknowledgement, be it regulatory acknowledgement, the imprimatur of being an insured blockchain platform or an insured crypto project, or integration with the banking system. So we got it. We literally got it all. And by today's regulatory standards, if you're operating in this space and you're unregulated, it's because you chose to avoid regulation altogether. Arbitrage, race to the bottom are still tendencies, but they're no longer a feature, right? Here in the U.S., the era of regulation through enforcement is long gone. Even if the Clarity Act stalls in Congress, the leadership of each of the major market institutions, regulators here in the U.S. Have used their own existing authorities to advance market certainty and regulatory clarity. Otherwise, institutional adoption would not have happened. Full stop. Think about how long it took an alternative to the internal combustion engine to take off, despite the fact that electric vehicles were an opportunity for decades. It didn't just take breakthroughs and innovation, it also took regulation to finally catch up with innovation. So I think the same is happening with tokenization, blockchain, stablecoins as a category. But when you start to compare and contrast, I wrote an article for the World Economic Forum comparing Mika to Genius. There's about an 80% overlap in similarity between the two. A stablecoin issuer, it's a bankruptcy remote structure with no risk. Trust, transparency, and accountability are features, not bugs. You're a near peer to electronic money in Europe. Here in the United States, the Genius Act creates the first national equivalent of a payments license and framework, which we have not had amongst all the advanced economies. There are some fundamental differences, however, where ironically, despite Europe's tendency for consumer protection to be the heart of a European regulatory regime, the Genius Act is actually much more conservative and restrictive on a stablecoin issuer than Mika. For example, in Mika, you have to have reserves inside the banking system amongst a dispersed group of banks. And one would argue, based on classical bank risk management, that that is actually an improvement. I actually think it's a source of risk. Because what happens if the balance sheet of the banks become a source of risk, like we saw here in the United States a few years ago? And so that's a critical flaw designed into Mika that I would argue, as Mika comes up for review in 2027, they ought to revisit. It's way too prescriptive, whereas the U.S. regime is much more principled. But nonetheless, call it 80% equivalent. And so now the fight that we all have to push for broadly is harmonization and passportability of equivalent rules. Because as you can imagine, there's a little bit of a tendency to want to balkanize, ironically, open internet-based economic activity. And so we're fighting for this notion of regulatory reciprocity and harmonization. As a matter of fact, another thing that would be a little ironic in an America First domain that we're now living in is the Genius Act says America First, but it doesn't say America alone. In fact, it endows the Treasury Department with the ability to seek out international harmonization and regulatory reciprocity in the law. And so the very first example of this might be the Transatlantic Task Force on Modernizing Markets between the U.S. and the United Kingdom, which was announced between our Treasury Secretary, Scott Bessent, and the UK Chancellor of the Exchequer, Rachel Reeves. A little bit of a technical example, but the Internet of Value can only truly work if the regulations of this activity acknowledge scale and acknowledge a global nature of the product, and you start to see rules and regimes emerge that are harmonized to that. So there's a lot there in that domain. And then obviously the United States is catching up with the rest of MiCA with the follow-on legislation to the Genius Act known as the Clarity Act, which would look at crypto market structure, what's a commodity, what's a security, what's a collectible, and the broader market conduct side of the equation. We're close to the finish line. There's some equity issues that need to be managed there around yield versus no yield in stablecoins, and some other issues as well that matter, for example. But you could start to see a little bit of a bipartisan streak emerging for that bill as well. And that would level the U.S. up fully to a regime that's comparable to the European structure.
That's great. I was going to ask you about the UK because I can say with confidence, very seldom do we have somebody on the show that has given evidence before the House of Lords. So congratulations.
Yeah, right.
Just quickly, you kind of briefly touched on it, but I mean, is your sense there from the UK perspective, no longer part of EU, looking at harmonizing this? So how do you think folks are thinking about that?
Yeah. Well, yeah, indeed. I've given evidence now at the House of Lords, which was a lot of fun. I was, my big concern was not to slip into an affected Downton Abbey accent as I was responding to the Lords and all their inquiries. But frankly, it was amongst all of the hearings that I've ever done, period, it was the most substantive. There were no political potshots, and the parliamentary inquiry really went deep into the subject matter and demanded of the witnesses, myself included, a representation of their expertise as opposed to trying to embarrass us as witnesses. So it was a really great experience overall. And then I wrote an article in the Financial Times shortly afterwards, basically drawing on the UK to, number one, play to its strengths, which is an incredibly important global financial center that has, for the better part of the rise of digital assets, now a multi-trillion-dollar category, has been on the sidelines taking a wait-and-see approach. That wait-and-see approach was justified historically because FTX and a lot of the bad things that happened in crypto necessarily did not touch their shores nor their financial system. But I would argue that that's a bad approach looking forward because the category is too important. And so my encouragement of the United Kingdom is take the best of both sides of the English Channel and the Atlantic and land at a regime that is uniquely British in its character and qualities. And I think they're on the cusp of doing that. I'm very optimistic about Keir Starmer's government, the Bank of England, and many others are really starting to understand how digital asset innovations can play to the strengths in the United Kingdom. And so I think it's a second mover advantage that the UK can accrue.
Okay, great. And one question I think that is kind of, I often say it's the other side of the coin of payments, but it's also very much part and parcel with any kind of regulatory regime and AML and CFT is the topic of identity. It's also near and dear to our heart. It's what's happening with the European Digital Identity Wallet program here and many other things. I know Circle back about 2022 timeframe had a pretty strong push into the space with, I believe it was pronounced Verite, so correct me if I'm wrong there. But I noticed we're not talking a lot about identity. So just very widely, how is Circle thinking about identity? Is it a strategic part of the digital money layer? Is it something Circle wants to be kind of owning, partnering in, progressing? Tell me a little bit about how you think about that.
Yeah. So the project that you're referring to was a Verity would be one way to pronounce it, or for the European audience, Vérité. But the crux of it is like so many things in our industry, and in many ways, maybe my internal combustion analogy is a good one, that it took something like Tesla to show up to put a viable commercial grade challenger to the dominance worldwide of the internal combustion engine. And the prospect of mass adoption of electrified vehicles would not have been possible even if the technology was really old, unless a commercially adopted product showed up. And I think digital identity is exactly that stubborn issue right now, which is that it still matters and it matters enormously. But it cannot be a standards war between rival firms. It needs to be seen as genuinely ubiquitous and broadly available technology, policy, and other changes that address, I think, frankly, one of the world's most stubborn and insidious issues, which is that, forget the technology that we're discussing in a minute. We have more than 1 billion people who don't have a nationally issued ID that would be an acceptable form of know your customer screening to enter the formal economy. 1 billion. And the number probably grows every year and every day because of all the crazy stuff happening on the planet. And on that score, we should be entirely technology agnostic and neutral and restless as financial operators and as people until someone says, here is a way of ensuring that every digital wallet in the world has a blue check mark without sacrificing people's financial privacy nor digital identity theft and other risks forever. Because locking out 1 billion people from the formal economy is a bigger risk, in my opinion, than the risk of potential single actors trying to dominate a system with illicit finance. So somehow we have to figure out how to turn the script around on this one. Obviously, Circle cares a lot about this work. Verity is an open source technology standard whose technology has been used in a range of different identity and attestation and credentialing projects since Verity was announced. But we realized that Circle alone can't move that market, and we were trying to continue catalyzing policy, regulatory, and technology players to coalesce around standards. It's a little bit like Blu-ray versus DVD, tragically. And I think we need retail-facing financial firms, policymakers, and others to sort of set standards and accept them. And Circle will promote, augment, employ, and support these standards as well. We should all, of course, remember, Circle doesn't face retail end users. We're more like a Visa and a MasterCard, in which you're not the customer of Visa directly, Jonathan or Jonas. You're the customer of the bank or the institution that issued you the card. And in some ways, we couldn't move the entire retail market sufficiently to make a dent in that multi-billion person digital identity gap that I just spoke of.
And it's really interesting, Dante, because it's as I said, it's all about standardization. And what we see here in Europe, that these standards, these rails for identity are really being developed now with the European Digital Identity Wallet that actually leverages a lot of the standards actually coming from crypto land, from self-sovereign identity, which is then also applied in other countries. So I like the example you made with Tesla and the combustion engine. So maybe that's a blueprint for future identity, but let's see. I mean, time is really running, Dante. We just have a few minutes left, and we really don't want to keep you busy. I'm sure you have other stuff to do as well. But maybe as a last question, what is your look on the market in terms of like general stablecoin growth? Let's say you said still a lot of use cases will come, like AI, treasury, etc. Generally for stablecoins, but also in particular for euro stablecoins. Because we know you said you have your euro stablecoin. It's the biggest in the market. That's of course true. But in terms of the cake, the fraction, the share is still pretty low, right? So it would be great to get your crystal ball perspective for the last question on how do you see the market here develop?
Yeah, I mean, well, one, I'm always generally guarded about using a crystal ball to make any prediction, except to say, the future of money is already here. It is just not evenly distributed, would be my one prediction. The second is, take the institutional wave seriously, right? For those of us, and the three of us have been at this for such a long time, that we may be impatient with when we think of institutional adoption or ubiquity or the daily question I often get in Washington is, where and when can I buy a cup of coffee with a stablecoin? And I think that's a little bit of a wrong question, because if you still use the terms of art, stablecoin, blockchain, crypto, digital identity, then you still know that the curve on the technology adoption is still steep and you're still climbing it. When I think the technology and the whole conversation has really reached maturity is when you no longer use the terms of art. And I think that moment is upon us now, because you could envision a world in which geolocated smart digital money on a secure, cryptographically enabled digital wallet is made available to you. And the payment can be rendered with near-field computing and contactless payments. And in the background, the settlement asset is a stablecoin. And in the background, the settlement rails are blockchains. And I think that's where the market is pushing for, right? And so it's less a question of what happens next and what sort of single new competitive factors grow the category. Because I think the category is now at a very, very different level of institutional integration and adoption. And the big unlock, frankly, has been legal and regulatory clarity. And so I'm very encouraged by that. And I've always said, if you still are talking about a technology, then the technology is the protagonist and the results are not. And so I think now what we're going to start seeing is more and more institutional adoption and more fading of the technology into the background, at which point the results will do the talking, the integration will do the talking, and you and I maybe will not.
Well, and I think that's a perfect way to end this conversation, unfortunately, because I think we could do this for hours. At least I could. I could go on for hours and hours with you, Dante. Really appreciate it. Thank you so much for the great conversation. Thanks for taking the time. But most especially, thanks for sharing your insights and your wisdom from literally somebody who's been on the front lines of policy and digital money for many, many years. So thanks so much. Anyone listening, will definitely include links to Circle and, of course, to Dante's work in the show notes.
Amazing. Well, looking forward to reuniting the band the next time, gentlemen. Thank you for having me on.
Yes, and also thanks from my side, Dante. It was always insightful and also entertaining. So I always enjoy that when speaking to you. And of course, also dear listeners, thanks so much for joining the podcast, for listening today. If you like this podcast, feel free to subscribe to the podcast. Let your friends, your family know about the podcast. Everybody who's interested in the future of money is very welcome. And we see us for the next episode. This is Bitcoin, Fiat, Rock and Roll. See you next time.
The views expressed are solely the personal opinions of the hosts and are provided for informational purposes only. This podcast does not offer financial or investment advice. Always conduct your own research and make well-informed decisions before investing. Please be aware that the hosts and guests may hold cryptocurrencies or digital assets discussed in this episode.